Major support for these programs is provided by Bank of America Merrill Lynch and Perfect Building Maintenance, New York Community Bank, Kilroy Architectural Windows, New York's Window Company, Greenberg Traurig, LLP, M&T Bank, Chase Commercial Term Lending. Additional support is provided by Briarwood Organization, Bruce Mosler, Capital One Bank, Cassidy Turley, C.B. Richard Ellis, Chelsea Lighting, Cushman and Wakefield, Dime Savings Bank of Williamsburg, Douglaston Development, DDG Partners, Hal Fettner, Durst Fettner Residential, Friedman LLP, Accountants and Advisors, Gemini Real Estate Advisors, LLC, Genova Burns and Gian Tomasi, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, James Orphanides, Centurion Holdings, Corman Communities, Madison Realty Capital, Margolin Weiner and Evans, LLP, Certified Public Accountants and Business Advisors, Massey Knackle Realty Services, Meridian Capital Group, Newmark Knight Frank, Sterling and Sterling, SJP Properties, Stonehenge Partners, the Wickoff Group, Urban American, and Ackman Ziff Real Estate, Ariel Property Advisors, Eastern Consolidated, Essex Capital Partners, Goldman Properties, Moynihan Group, Musk Development, RAL Development Services, the Spandrel Group, LLC, Rosewood Realty Group, Terra CRG, Triangle Equities.
$50.5 million visitors to New York City, 27 million room nights last year to visiting New York City. It sounds to me that the hospitality market in New York City is doing well, but I'm not certain. So I've brought together today 4 people who really have a grasp of what's happening in the hospitality market. My guest today includes Matt Adams, Area Director Vice President for the Hyatt Hotels, Mark Landsberg, Executive Vice President, Hospitality Finance Group for Wells Fargo Bank, Matt Livian, Vice President for Finance and Development for Sidell Group, and last but not least, Sean Hennessy, President of Lodging Advisors. So since you are the consultant, the advisor, the consigliere to the hospitality market, how is the market?
Well, the beauty of New York is that there's a virtually endless stream of people around the world whose dream is to come take a New York trip. We have yet to see the kind of pricing power in this recovery that's driving the average rates up. So around town, rates are still down probably about 15 to 18% from where they were at the peak. But the good news is the rooms are pretty full at this point.
You have probably one of the finest hotel inventory in the city, you know, with Lexington Avenue, you know, with Wall Street, with the Fifth Avenue, and with other ones in the Lexington and 48th Street. How do you see the market, Matt?
I would agree that you know, we continue to see very strong occupancies into New York City. The pricing has not recovered to 2008 levels. We are getting close and comparing ourselves to 2009, finding ourselves at parity or actually starting to eclipse those levels there. But you know, the demand coming in from some of the areas, and that we've traditionally seen strong demand. Europe has softened over the first 4 months of this year. Although we've seen some bounce in travel from Brazil and other parts of the world, it still hasn't created that pricing demand that we would like to see to drive rates.
Now, Matt, you guys recently opened up the Nomad. How are you doing?
Well, so far we've been very pleasantly surprised. We think it's a really strong product. We're very bullish long term on the area. We think that part of Broadway long term is going to be a great hotel destination. You have access to Midtown, downtown, very central location, and we just think the product is really strong. It's been open a little less than a month now, and so far the PR, the editorial we received has been really strong.
Now, what about occupancy and rate?
You know, it's a little, we probably only have about 50% of our inventory online at this point. I would say at our Ace Hotel a block away, occupancy and rate have been strong this year. Rate, you know, our strategy there at this point is to push rate a bit. Occupancy was very strong last year. We're performing probably at about a 15% premium to our comp set, and that product also has been very well received. You know, the other thing with the Ace Hotel is that the food and beverage there throws off a lot of cash flow and has been wildly successful.
Now, the interesting situation, you know, you bring up the subject of food and beverage, and then I'll get to Mark and to Sean over here. You know, Matt and I, a couple of months ago, had lunch at the Hyatt, and the interesting thing was Matt showed me this very unique, creative approach for the food because he wanted to cut out some of it. Let's talk about that.
We implemented a 24-hour marketplace in the hotel. We found that, you know, the traditional room service is just dissolving as part of our traditional core. So in a 1,300-room hotel, I may get less than 15, 20 covers for breakfast. So we created this marketplace where people could do a great grab and go, and we've seen it be terribly successful, outperforming room service on many months in terms of the volume.
Are you eventually going to get rid of room service, do you think?
I think that room service is one of those things that we won't see except in the ultra-luxury hotels. If you look at the marketplaces, the smaller hotels that are being built and developed in New York today, they have very minimal food and beverage, no room service at all. So I think you're going to find it's only going to be something you'll find in an ultra-premium hotel.
Money man, you're the guy who lends money. You know, the Nomad is open a month. You know, they have construction financing right now, or should I say renovation financing, because it was a beautiful renovation. And you're the one who has to make the decision, because hotels are like restaurants. Each day the register is open. You got a new customer, you have to change. You know, it's like the linens and everything else. But I think if you drop the towel down, they will make the beds over there. So my question: how do you look at the New York hospitality market?
We look at the market; it's very strong right now. You look at rate, occupancy, a little bit. We were talking earlier before we went on air in terms of a little bit of softness in the first quarter. We noted that, but I think that there's certainly, with the right sponsorship in New York City, owner and operators that understand the market and can, through thick and thin, put heads in the beds. We feel very comfortable about the market. I think that you have to also be careful, though. Certainly with the acquisitions, we've seen a number of acquisitions recently in New York City. You always have to be careful in terms of the capital that's going to be required. Once you make that acquisition, how much money do you have to really put into this property to either restore its luster or to bring it up to a standard that the owner really wants for the property?
I think that's a great comment. I think the hotel that really sold at a very low price was the Novotel Hotel on Broadway in Times Square. Now, it sold for a low price because nothing had been done in the hotel probably in 10 years or 15 years. So one would say there was a lot of deferred maintenance. Now, you spent a lot of money, over $150 million?
$130 million recently just in our renovation, yeah, to bring the Grand Hyatt back to the luster that we wanted it to have.
Now, how do you see companies, are a lot of people, from what you see, spending a lot of money to renovate their hotels? I know that the Grand Hyatt, the Roosevelt, and the Roosevelt don't need more than renovation over there. But
well, there's significant pressure around town to renovate for two reasons. One is there's a lot of new competition, so you need to be up to snuff in order to make sure you're meeting the level of quality that guests expect. The second thing is that in 08, 09, 010, and 10, there was not that much renovations going on because of the challenges the industry faced. So there's some catch-up going on as well throughout the industry.
Now, here's the question. The Grand Hyatt, would you call that a 3.5 star, 4 star?
We're a 4-star hotel.
4 star, okay. I'm just trying to get an idea. The Ace would be what, a 3?
3.5 to 4.
And the Nomad?
4.5 to 5.
Okay. So we're looking at different level. The Andaz?
They're probably, I would consider them a 4.5-star hotel, 5-star.
Now, who are the customers going? Who are the different? What's the difference of a consumer going to a Grand Hyatt, to an Andaz, to an Ace, and a Nomad?
I mean, for us, the Ace is very much a young customer. The property itself is very much rock and roll, hip, young customer who places a premium on the experience that they get. Nomad is much more of a mature product, higher end, larger rooms, double bay windows in all the rooms, 4-fixture bathrooms. And so, you know, we anticipate that the customer is going to be much different at both properties.
Now, but here's my question. Hyatt, everybody knows Hyatt. And, you know, because of the branding, there's no question people feel comfort. That, you know, it's like the security, you know, when you hear, you know, it's like the good housekeeping seal of approval for Hyatt. No offense. People don't know what an Ace or a Nomad or, you know, or some of these, the Out NYC or something like that. How do you, as a banker, look at the financing of a hotel who really has limited brand recognition in this world? I mean, because, you know, people from around the world know it's Hyatt. They know there's a quality level, there's a, you know, they're going to be happy, and they also know they can always go back and scream at Hyatt corporate in case, or him because he lives in a hotel or something like that.
Sure, I mean, that's a pretty easy thought process, if you will. First of all, we tend as a practice to focus on flagged hotels. So having the distribution system, be it Marriott, Hyatt, Intercontinental, Starwood, is very important to us, by and large, when we're looking at hotels. Outside of kind of a few major markets, be it New York, San Francisco, maybe a Chicago, a Washington, D.C., in those markets, we would consider independent hotels, and we kind of look what their history has been. I think it's more difficult for us to look at a property and finance a property that has no track record, and let's say somebody's just decided to open up, with all due respect, a Nomad hotel, because you're basing it purely on kind of what the market's about, and not necessarily the ability of that owner-operator to be able to attract people to that hotel. In the case of the Nomad, for example, because you have the track record of the Ace, I mean, there'd be a lot of
Taking
evidence
because of the track record.
Because of the track record. But if I'm just going to open up a hotel and I have no track record, it's very difficult for a lender to be able to underwrite that property because you're just looking at the market. You don't know necessarily the ability of that person to put heads in the beds.
Prior to the taping of the show today, I was walking. I happened to be near the Nomad, and I noticed, like on 31st Street or 5th Avenue, there was a new Holiday Inn being built or opening up. And I saw the cranes on the mid-blocks between 35th Street, 37th Street, 39th Street. You know, I'm once again seeing hotels opening, being built where there were parking garages. So there's not going to be parking garages, they're going to be hotels. How do you look at this? I mean, are we back, you know, in the time that, you know, 2007, when every Tom, Dick, and Harry, I hate to say that, you know, was going to be a hotel operator and they'll get a management? It's like the guys in Brooklyn that you and I laugh with. How many more hotels can they take in Brooklyn?
Well, I mean, first of all, look at the statistics. New York's added 10, 15,000 rooms over the last couple of years, and the occupancy rate's gone up. It hasn't diminish the level of utilization around town. The second thing is, look at just a week or so ago, there was an article in the paper about Hid Rock Realty building the Courtyard on the West 30s, and at least publicly they're claiming an all-in cost of $350,000 a room. Hotels are trading well north of that, and so developers will do that all day long.
So, but you know what? Here, Manhattan is an island, and I didn't hear of a Hyatt hotel opening up in Long Island City or a Hyatt hotel opening in Brooklyn. How do you look at the boroughs in the market? Now, the Marriott Brooklyn Bridge is the hotel in Brooklyn, even though there are, you know, a number of hotels on Duffield Street and so on, and something called the New Hotel and so on. You always look for opportunities, and you're building this fantastic Park Hyatt on 57th Street. How do you look at the boroughs?
I think we look at Brooklyn as a great opportunity for Hyatt, and we continue to explore those opportunities as they come up. We're developing a Hyatt Place in Columbia, so I think we'll see some Hyatt Places develop in some of the outer boroughs, which you brought up a comment about these mid-block hotels. You're seeing a lot of that development in the small 120, 130 room size, limited to no food and beverage, where they're efficient, they're profitable, and they're affordable. And I think that's what you'll see in some of the other boroughs' development. So that would be for us a great place to put a Hyatt Place.
What's your thoughts of the boroughs?
Well, we don't have anything currently outside of Manhattan, but certainly as an analogous situation would be northern New Jersey and along the waterfront in New Jersey, which is very similar. You have similar type of demand drivers. We have New York City, the compression from New York City, and will do very well when it's very full in New York City. And you have to look at the actual demand drivers then in those markets when you don't have 100% occupancy in New York City, in Manhattan.
But you bring up a very good point, and this is the point that I've always joked with Sean over the many years that we know each other. You know, how many hotels can Long Island City have? There are 14 now. You know, everybody has a roof deck also. You know, that's the newest thing. You know, when the demand drivers are there, fine, people will go maybe to the Meadowlands or other places. But I don't see the demand drivers rushing and saying, I want to go to Long Island City. You know, even though the subway is close by, but it's not a main thing. How do you look at Long Island City and other parts of Queens?
Well, the challenge has always been that you have to charge less than for a comparable quality hotel in Manhattan. But by and large, your labor costs are relatively similar, your development costs are similar except for land. So it creates a bit of a squeeze that makes it difficult to have the deals be successful on the scale that they can be in Manhattan. But if you buy the land right and you run a tight operation, you can be successful. There was that hotel that sold in Williamsburg a few weeks back at a pretty eye-popping number. So there's, I think the market perceives more of an opportunity, and certainly from the traveler's perspective, NYC & Co. has done a significant job in trying to steer visitors throughout all 5 boroughs, not just Manhattan.
So do you think you'll open up and out of Manhattan?
You know, we've looked at opportunities in Brooklyn, and I think there are definitely pockets of Brooklyn where there are local demand drivers and organic demand driven. I think where we want to be careful is in areas where you rely on overflow from the city. As new supply comes into the city and the city goes from 75,000 rooms to 85,000 rooms, you know, you really want to be careful that you're not purely relying on that overflow from New York City. The other tough thing about Brooklyn is we typically like to focus on underperforming and underutilized existing hotels. And there aren't too many kind of unflagged, unencumbered assets in Brooklyn that you could buy and renovate and be in for a reasonable basis.
Here's a question. A number of years ago, Sean and I remember when there were plans for 4 hotels in Harlem, including a major Marriott, not a Hyatt. And I happened to sit on the board of the podiatric school, so I was always against it anyway, even though we were going to make money on the property. How many hotels, okay, the one hotel has been built in Harlem, and fortunately the alternative lender took it back. The same alternative lender was also going to finance another hotel on 125th Street, but that's going to become a Bed Bath & Beyond today as opposed to a hotel. Do you think there is a need in Harlem for another hotel?
It's hard to say. I mean, as a financially oriented guy, the ideal hotel site is usually one surrounded by 6 giant office buildings. And that's not the nature of the Harlem market. But you know, we've seen markets like Williamsburg that have a cachet, they have a restaurant scene, they have attractive elements that lead people there. So, you know, from a certain angle, you can see that in Harlem, but you know, at this point, I don't think you'll see a lot of development interest to bring additional hotel rooms to that part of town.
What about you, Matt? Any thoughts about Harlem?
Well, so we have a high place going up in Columbia, but I don't see anything really expanding.
Now, this will be
beyond.
where in Columbia University?
It'll be the development that houses the Whole Foods market. It's the Emmett Smith deal that went through, so it's still waiting to come out of the ground, but we anticipate that to happen shortly.
That's the one on 125th Street,
So.
which is, yeah, the land deal, which is questionable on that.
Yeah.
Now, we talk, you know, another area that recently has seen a hotel is they are building a Marriott Courtyard near the Prudential Center in Newark. This is the first new hotel in 40 years in Newark. And across the street, there is a conversion. It's going to be in a loft. It's a conversion of a Cass Gilbert building. You have hotels in New Jersey, on the Jersey waterfront, which Mark was alluding to before. How does Hyatt look at the suburban market in New Jersey and maybe even the Newark marketplace?
I'm not sure that we're really bullish on the Jersey marketplace right now beyond what our current inventory is. Again, I think if we're looking at development, especially it would be in the limited service brands and as those opportunities come up.
So it's interesting. You bring up, and I hear it all around. I think in certain aspects, the limited service is perhaps a big market of the future for Hyatt and for other people. Is that what you're basically saying?
I think it's going to become more of a larger part of everyone's portfolio. I think, again, as you just look at the development that's happening in Manhattan, a lot of that is in the smaller limited service hotel brands currently. So I think there's a lot of opportunity for that.
Mark, what's your thought about the limited service?
I think it's a great product in an urban environment. If you look at the profitability of it, you don't have a food and beverage operation, which burdens your P&L. You basically are running a hotel rooms-only shop in which the dollars that flow through are probably twice what you would see in a hotel that has a big food and beverage operation. So because of that, and for dollar from an investment perspective, I think it makes a lot of sense. Question is, in New York City, for example, we haven't really had a big convention hotel built in many years. And whether or not, Sean perhaps could address that more, but it's interesting to see, why haven't we actually built a big convention hotel by the Javits Center, for example?
Sean?
Well, I'm sure they're happy that nobody moved forward when it was offered for sale if the Javits Center is not next to it at some point in the future. And the economics on the food and beverage side are hard to make work in New York City, and as a select service or limited service hotel, you're generally not seeing the same kind of discount in room rate that you might in a suburban location where you don't have the amenities and the services. So you have little of downside risk, but a lot of upside potential by keeping your labor costs down and enhancing the profitability.
Now, the interesting situation is, even with the 90,000 keys that we have in New York City, we have very few true five-star hotels today. Now, you're building this new five-star hotel, which will open up, about a year and a half?
We're hoping for the end of 2013. It's a 250-room hotel. It'll be a true five-star hotel, the Park Hyatt, on 57th, right across from Carnegie Hall. When the building's complete, it'll be the third tallest building in Manhattan. It'll be a combined residential building as well, with 220 residential units in it, which will command some of the highest real estate values, as you've already seen on the market, with the penthouse now listed at $110 million. So it's going to be a true luxury hotel, and we're excited to have it open.
Now, are you going to, so my question is, that's one thing. How many true five-star hotels do we have in Manhattan today? Maybe 5?
True five stars, I would say you might have 10, but that would be it.
And for a city where 50 million, close to 51 million visitors, they should be doing well. So what's your thoughts about financing a five-star?
Kind of depends what the sponsorship is and what the capital structure. We recently, or last year, we financed the acquisition of the Palace Hotel. And I think that clearly is a great hotel. It's a great location. It was at one time clearly one of the best hotels in New York City. And the new ownership is going to be investing substantial capital to bring it back to its past luster.
I'm sorry. I think there's an interesting change too from what you would consider the traditional five-star hotel. You now have hotels like the Nomad, the Crosby, the Greenwich, the Gramercy Park, our Andaz projects within Hyatt that are starting to define a new modern luxury, a more contemporary style of luxury product, commanding great rates and good occupancies, but it's different than a Park Hyatt, a Mandarin, a Four Seasons type of guest
Right,
experience.
because they are smaller. They're smaller boutiques.
Smaller, less formal.
Right.
Different operations completely.
Do you believe that in a five-star hotel you need a major restaurant?
I think you need a signature restaurant in the hotel, yes.
Now, the problem normally with a signature restaurant, which you guys have been lucky on the Ace, is that the cost of running a signature restaurant due to certain of the union labor costs has been prohibitive, and it's been very difficult.
That has been the case, and some operators have been able to, go through a leased approach or bring in outside operators. You've been very successful with your operations both at the Ace Hotel and now at the Nomad, and as have other hotel operators. But I think that going forward, I think those are active discussions that we all have with the union relative to making food and beverage a much more profitable or get it to profit at some points.
Now, maybe food and beverage, but I think one of the most profitable segments of the hotels recently have become more on the beverage. Would you agree?
I think so. I think we now look at our programming as to see what type of bars that we're going to put into all of our hotels, and our Times Square property is going to have a rooftop lounge on the 58th floor of the hotel. Our Andaz with the bar downstairs does very, very well. So we see that as a great, separate, distinct component that we have to have.
How do you see the restaurants and the bars today?
Well, a typical hotel operation, you drive food and beverage revenues for one of four categories. Your room service and your restaurants are generally not very profitable and usually losers around town. Your banquet business used to be very profitable, but that's had its challenges, especially on the labor side and food cost side here in New York, which leaves the bar, which is very profitable, and coming up with creative alternative concepts, whether it's leasing out the facilities, whether it's a grab-and-go concept. There are hotels in New York where you pick up the phone to order room service, and it connects to the deli next door, and they bring it up for you.
I got 30 seconds. I really don't even that. But Shelley Fireman, who has all the restaurants on 57th Street, basically handles the food at the I think the Hilton Club across the street, because they don't have that. But I think I'd like to thank all four of you, because I think you've given me some insight on the market. I'd like to thank Matt Adams, Mark Lansper, Mr. Livian, and last but not least, the Dean, Mr. Sean Hennessy. Take care. Thanks again. See you next week.